Hi, I'm Ruthana Foulkes and I'm a director at TU-Automotive, and I'm here today at Insurance Telematics Europe. And with me I've got Aldo Monteforte, who is the CEO and founder at the Floow. So welcome, Aldo.
Thank you. Good morning.
Nice to have you.
Thank you very much for having me.
So a few times you've been at the event, so it's good to see you back. Would you like to explain a little bit more about the Floow and what it is that you guys do within the marketplace?
Absolutely. At the Floow we are a telematics service provider. We are a technology-centric organization. We are currently almost 50 people, highly technical in background,
Right.
Vast majority computer scientists, physicists, mathematicians, actuaries, psychologists, and we work with insurance companies worldwide with a view to help them making mobility safer and cheaper.
Okay, fantastic. So I know your conversation today at the event is to do with lessons towards mass market adoption. Would you like to talk us through a little bit more about what you've learned and what other people could take value from and apply?
Yes, I'd love to. Mass market adoption of telematics is the journey we are on. We're not quite there, but we have seen incredible progress compared to where we started about 3 years ago. And what I was trying to do today with the audience, really sharing what we learned in the process, and that was in a nutshell, that in order to create the conditions for mass market adoption of telematics, there are fundamentally three deliverables that we need to offer. One is making telematics, the technology for data gathering, as cost-effective as possible, which has led us to use, amongst other things, smartphones as a very powerful medium for gathering mobility data. Secondly, we need to generate scores and analytics that are predictive and strong, solid, scientific enough for actuaries inside insurance organizations to feel confident that they are prepared to use these analytics on their day-to-day job. And last but not least, we have to use the underlying data to craft and deliver digital services to end users that engage the consumer by providing safety, security, convenience, location-based services in ways that delight the end user and reinforce the process of adoption of this technology. So in a nutshell, we really need to work with the actuaries on one hand and with end users on the other.
We've been hearing a lot today about the end user, and they've been obviously a major part of the conversation for some time. But there definitely seems to be some making like waves and movements towards really knowing what it is that they want and what they're going to respond to. We've heard about value-added services being thrown into pricing, to work alongside pricing for a few years. But there seems to be an acknowledgement of what actually is going to work for the consumer. So if you can maybe be a bit more specific about how you're actively getting that consumer engagement and what you're finding is working with your army of psychologists that you're working with. What's the kind of golden ticket, if there is one, I guess?
Yes, I think it is too early to identify one specific concept of service that we can say has been embraced by 100,000 people. So we are experimenting with many different concepts, from, for example, giving consumers the ability to invoke help by pressing a button on the app, which will communicate the coordinates of their position on the ground to a secure operating center that would be taking care of their situation, of their accident or emergency. We are experimenting with location-based services. We know where journeys start, where journeys terminate, so you can push notifications designed to encourage the consumption of a certain good or a certain service based on location. We are crafting club-based models where end users are encouraged by virtue of them driving responsibly to migrate from one tier of the club to the upper level of the club, and in so doing unlocking the generation of certain rewards or certain benefits. It's a model not too dissimilar to what airlines do with frequent flyers. only with the concept of driving responsibly as the key driver. And we are investing, as always, it's a core part of our ethos, into education with a view to partner with parents in the process of delivering educational services to their children.
Okay.
So as you can see, it's a combination of factors, it's a combination of different concepts, all generated and enabled from the same underlying data. On the expectation that some of these will resonate with certain segments of the user population.
Okay. I mean, that brings me nicely on to my next question, what I was thinking about when you were giving that answer. And that's about the consumer segments. Because obviously usage-based insurance has traditionally been thought to be for the younger, riskier, more higher-priced drivers. And value-added services was hoping to open the door or the pathway to be able to engage larger kind of consumer subsects of society within to the products. I mean, are you still focused on the young driver, or are you moving into other areas or other, societal, I don't know what the phrase I'm looking for here, but you get what I mean.
Yes, absolutely. Well, of course, young drivers are a core and natural target for insurance telematics. That's where the majority of our clients are focusing right now. So that's going to stay as a key part of our efforts. However, we are also finding a lot of interest from commercial insurance.
Okay.
Commercial insurance is insurance designed to cover fleets, particularly mini fleets, and there is a really obvious service that fleets would find it very helpful, which is how can you help me with telematics in better managing my fleet?
Right.
So we're working with some of the clients in the space of commercial insurance to deliver a proposition where the value add is a basic fleet management proposition for the fleet.
Yes.
So this is other than consumer, but the commercial space is really as important as the consumer space, and there are value-added services that can be provided there. In the consumer space, it's too early to say. We do reasonably expect that the range of services that we are experimenting with will resonate really well with drivers of all ages. Okay.
And obviously the proposition then will be the value-added services rather than the pricing to a certain degree.
Absolutely. With value-added services are a great tool to diversify away from a pure price play, which nobody really wants.
Of course. So you mentioned, obviously, I mean, it is younger drivers that you're looking at as your core focus. We're seeing a lot and hearing a lot of stats coming out at the moment about millennials and then the generations that come after, and the way they are going to get from A to B. And you mentioned make mobility cheaper earlier. And this question about the different mobility models is something that's being really called into question at the moment. And we're seeing automakers say that they're no longer manufacturers, they're mobility service providers. And how that's going to look and feel isn't 100% certain yet, but the term car sharing is definitely thrown around. If you no longer have a driver of the younger age that owns a vehicle that needs insurance in the traditional models that we see, of which UBI is obviously based upon to a certain degree, how is that going to affect your business or the insurers, or how people are insured is going to change?
Yeah, it's an excellent question, and we are seeing the patterns of mobility changing significantly, and we are very excited by the emergence of concepts like Zipcar, for example, or Uber, or similar models whereby you are paying to be taken from point A to point B. However, as long as, even in these models, as long as there is human factor involved, I mean, you have a driver and a human being taking responsibility for performing that exercise in transportation, insurance is necessarily part and parcel of that proposition. You would be monitoring maybe a different driver than the person that has given up ownership of the car in this context. So I think these changes are in fact welcome, and they make sense. I don't expect necessarily a significant impact on our business model or necessarily that of our insurance clients. However, that may change in the medium to long term as vehicles become autonomous. That clearly would be a completely different environment.
Exactly. I mean, and you've brought me on to my next question is there any kind of concept or thoughts at the moment about how the autonomous vehicle will change things up? Because there's loads of questions. If a car's got no risk, what do you insure? If the car goes wrong or the systems go wrong, who's liable? I mean, there's so many questions. I mean, is this something that you're looking at the moment, or is it something that's just too far in the future to really address?
Well, a world in which all mobility takes place in a fully automated fashion would be a world without fatalities. And that can only be a very, very good thing for all of us. However, I think at this stage, considering where we are today, with 1.2 billion cars in circulation in the world, all requiring a driver, from this world we are in today to that state when all cars will have to be autonomous, I find myself at odds in trying to predict the length and the path that will take us to that destination.
Yes.
So I consider it a very interesting and welcome development from a societal standpoint, but one that is going to take a very long time to come to practice. Let alone the fact that it's not necessarily said that people will want to completely renounce the act of driving, which is in most cases also a source of pleasure and distraction.
Yes, indeed, indeed. Well, on that note, we'll end it here today.
Thank you.
Some very insightful thoughts there, Aldo. So thank you very much, and good to have you back.
Thank you, and thanks to your audience.